It's a very emotive word, loyalty, and we use it probably in the wrong way in marketing a lot. So I'll do a deep dive on 3 or 4 sectors to show what the reality of consumer behaviors are when it comes to loyalty. So to deliver this study, we specifically Alfonso and the team at Intent have used a product called Market Explorer, which is basically a large-scale database. It's 500,000 Fintonic payment data records and over 11 million Mass Orange mobile browsing records. And it goes to the point that Jose Luis was talking about, which is that the reality of traditional ways of understanding data is very different now in a world where we have a digital breadcrumb trail. So with these sorts of data sets, you have real behaviors of consumers. It's not what they say they do or what they think they did. It is simply capturing the reality of what they actually did. And the second point about it is because it's on such an enormous scale, it means that you can use very specific questions and get very specific answers and still have robust insights. We looked at these 17 odd categories. I could have picked any of them to highlight for you, but we'll come back to that later. But it covers a multitude of pretty much all consumer spending is the way to think about it. So let me just go back to the concept of loyalty. Well, here's one description of it, and you can read it as fast as I can, but it's around continuation of purchases repeatedly over time. And you could go one step further and say, actually, no, it's more than that. It's about loyalty is about an emotional connection between the brand and a consumer. And it's not; these are not definitions that I've made up for today. They must be right because they come from ChatGPT. So how do we measure loyalty? So Jose Luis just showed us how loyalty schemes are measured, but as a brand or a retailer, how do you measure loyalty? Well, traditionally you use first-party data. You may look at your sales data. If you are lucky enough to have a loyalty program, you can analyze that and you get information about SKU level that is extremely valuable. Or you use surveys. You ask people to tell you what they think or what they think they did. But we do it a different way. We take this third-party data. We measure purchase transactions, and from that we create things like Z-scores, which show a degree of the propensity of multiple brand usage versus single brand usage. We look at share of wallet, and in the telco data, we look at the way that people browse to understand their interests and their lifestyle or their life stage or their life state and their general behaviors. And we can build segmentations out of that at a macro level. There are many loyalty schemes, and I'm not going to dwell on those. Jose Luis just took you through that section, but they obviously exist and are well established, particularly in certain markets. So just moving to the subject then, it's about the overall market dynamics post the price crisis. This shows you the change in spending, and it shows you the average spending over 23 versus 22. And you can see the winners at the top and the losers at the bottom. And you can see for yourself the categories that rose to the top. If you look at it, it's more specifically, it's food and fashion and restaurants and insurance were the ones that grew most, and energy and leisure parks, bizarrely, were the ones that fell 23 over 22. But if you look at it adjusted for inflation, then the answer is quite different. Here you see a very different set of sectors at the top of the list and different at the bottom. So whilst energy and mobility and fashion post the application of inflation are the higher ends, you can see the change between one versus, and this is sector inflation, not national inflation. If you look at the change in ATV, then you see again petrol stations at the top and so on. And at the bottom, you see supermarkets, airlines, media, hotels, online travel agents. And this again is the change post-price crisis in the recovery period. When you look at purchase frequency, which again obviously now has no inflationary effect, you can see that in broad terms, there was a significant drive back in terms of frequency of purchase post-price crisis, and particularly true in energy and media and fashion. So the conclusions of this part of the study are that in broad terms, most sectors have returned to growth post-crisis, and it's been fueled by two things. The predominant driver is the return to frequency of transaction, and it's offset by average transaction value declines across the board, with the exception of a few sectors where the sector inflation was so great during the price crisis. So you see improved ATV and improved frequency of transaction and lower ATV. So let me look at it now, because I think it's more interesting at a category level. So what you see here are all of the categories that we've analyzed, and you can see on the right-hand side are effectively categories that display low levels of brand loyalty, and the bigger the blue line is, the greater the level of highly loyal, or put another way, consumers that use one or two or very few brands in the sector. So you see at the bottom, supermarkets is the one of the sectors where consumers use multiple brands, and we'll come back to loyalty in supermarkets later. Whereas shared mobility, online travel agents, there are a number of it's dominated by consumers who use a few brands. So that's one picture of loyalty across these different sectors. The other way of looking at it, particularly in relation to the bounce back from the price crisis, is to look at it year on year. So here you have the purple line is the 2023 numbers, and the blue line 2022. So you can see those sectors where the consumer has become increasingly loyal more recently, and those where loyalty has fallen away. One of the things, or two things to comment about this slide. The first one is that the brands with the highest level of consumer loyalty are not necessarily those that have loyalty programs, but they are the sectors where there is an inherent data richness, and therefore an inherent asset that people can use to generate increased loyalty amongst their consumers, i.e. they generate data in the day-to-day transactions. And at the lower end of the chart, you see categories that are actually well known for having loyalty schemes, and that leads us to a conclusion that we'll come back to later. We looked at it to see whether or not there was a difference in sectors or in loyalty by age, and the short answer is a little bit. It's true that older people are tending to be more brand loyal than the youngers. However, there are three categories where that's not true: fashion, media, and telco. And there's always an exception to these rules. But in broad terms, that age does have a bearing on consumer loyalty. We looked at it from a regional perspective. In this slide, we just looked at it Barcelona, Spain, and the rest of Spain, Barcelona, Madrid, and rest of Spain. But we could do it in 10, 12, 15 regions if we chose. And again, the answer is that in broad terms, people who live in large cities tend to be less loyal in pretty much all sectors than people who live outside of Madrid and Barcelona, with the one exception, again, for the mass orange guys here, it being telco. So it leads us to a series of conclusions. The first one that we've covered is that we have seen more frequent transactions and lower ATV post the price crisis in the majority of sectors. And secondly, we've seen that there is a change in loyalty that has come about partly because of and partly as a consequence of the price crisis, and we're seeing changes in consumer loyalty, particularly in categories that were most affected by inflation. But we're also seeing new businesses or data-rich businesses benefiting from that asset as part of what drives their loyalty, and that's growing their loyalty as sectors. In broad terms, geographies have behaved, broadly speaking, consistently, but age is more of a material factor when it looks at loyalty in Spain. So overall winners and losers, you can see at the top, some of these sectors make more sense than others, but you can see that in broad terms, the growth has been in mobility, in telco, online travel agents, so say those ones with data assets that they can leverage, and the declines have been in more sectors that are that were higher ticket items. If I look at it in restaurants and fast food, this is 23 versus 22 again. And you can see the ones at the top, McDonald's, Glovo, and to an extent too good to be true. And if you look at the year-on-year performance, you can see the ones that are growing, Uber Eats, too good to true, Domino's, and the ones that declined most, Telepizza. I'll come back to this sector in a second, so I think there's some more interesting stuff to do. What is true about the ones that you see at the top of that list is that they do have extremely well-developed consumer experience mechanisms based on data, based on the knowledge of the consumer that they harvest from their day-to-day transactions. If I look at supermarket loyalty now then, so these are the brands at the top with the greatest level of loyalty as described by the Z-score. And you can see that it's inevitably here in Spain, Mercadona is right at the top, Eroski and Carrefour just below them. If I look at the year-on-year change, then you see the Carrefour, Super BM, Lidl at the top, Macro, Lupa at the bottom. And the summary of that is that Macro, Lupa, Spar, and Aldi, surprisingly, have declined in loyalty over the course of the last 2 years. And despite all of that, and despite all of the conversations we've had around loyalty schemes, Mercadona, the brand with the greatest loyalty in Spain, supermarkets, has no loyalty scheme. If you look at it in retail, in fashion, and this is a very interesting market, which again we'll come back to. In broad terms, you can see the brands with the highest loyalty are Shein, Primark, Vinted, and Zara in that order. And bear in mind that is not remotely the same order with which they are represented in market share. But that is the order in terms of brand loyalty of consumers of those brands. And the ones that are growing, I mean, better news for Inditex. You've got Pull&Bear moving further up there. But you see Primark, interestingly, despite its growth in Spain, is reducing in terms of its loyalty intensity as it grabs new peripheral customers. The others alongside Primark and the one that looks most at risk, I think, is H&M, and to a lesser extent, Kirby. But interestingly, Shane, again, have no specific loyalty scheme, but they are probably the most advanced in their application of data. If I look at insurance, then this is a very different sector. It has much, much higher loyalty than the ones that we looked before. You can, and you have to excuse my pronunciation, but Seguro Caixa, right at the top, BBVA, Mutua Madrilena, and further down at the bottom, you see some of the others. What is interesting is Mutua Madrilena, Generali, and Sanitas are the ones with the greatest growth in loyalty in the last couple of years, and the greatest declines are in MetLife and Asisa. But with the insurance industry and sector, it is much more interesting to look at the subsectors, so health, pet, travel, car, home, life, as well as the macro total. So conclusions then for the second half. I think it's fair to say that loyalty looks to be predominantly driven by penetration and accessibility and share, because no matter what happens, ultimately you see the bigger brands towards the top. But the existence of mature of loyalty programs seems to be moving towards a defensive mechanism in particularly competitive markets. And the degree of digitization of the brand can be used to positively influence experiences and personalization, which is then using the data to drive the right offers. And the use of artificial intelligence is increasingly behind that drive. So let me now do a deep dive quickly into these four sectors. And what we'll look at is we'll look at a concept called share of wallet, then consumer penetration and cross-brand usage, average transaction value, and then frequency of purchase. Because ultimately, if you're a retailer, although there are many, many KPIs, sales are only made up of three things. They're made up of the number of customers you have, the frequency with which they come to your shop or site, and the amount that they spend. And you can change any of those three variables upwards and downwards, and that's what drives your business, because sales don't come any other way. You don't get sales from people who are not customers. The more often they come to you, the better it is for you. The higher their ATV, transaction value, the more money you make. Although many things in retail are very complicated, that's actually pretty straightforward. Now, loyalty schemes will give you information about what your consumers are doing when they're in your shop. And that's really helpful, particularly at an SKU level, a stock keeping unit level, or on your website. But most consumers are not monogamous. Most consumers, as you'll see, spend more of their time, and your consumers, every brand's consumers, spend more of their time in your rivals' stores or on your rivals' websites than they do in your own. So if you don't understand what they're doing when they're there, then you only understand a fraction of what your consumer's life is like. And ultimately, if you try and interpret your own data without that contextual data, it's meaningless. And I've been a retailer for 15 odd years, and at the end of every Christmas season, I'd sit there with 5% growth and think I'd done a pretty good job. And then I post my results, and then other people post their 10% growth results, and I feel like pretty small. Or I struggle to make break even year on year on my trading results for Christmas, and I feel pretty miserable about it. And then I find all my rivals are posting -5, and I think I'm a hero. So the meaning of my own data is not possible to interpret until I understand the context in which I've operated. So 3 key questions. How many, and I'll still call them loyal customers, but how many loyal customers do you have? How often do your customers engage with your rivals? And when they do, how much money do they spend? And is it more than when they spend with you, or is it less? Do they go there more often when they come to you, or is it less? We've done this work again in these 17, 18 categories. There are more, but I'm only going to go through one or two, so don't worry about your time. But we can do it in all of these. We've done it in all of these markets in different ways. And what you're going to see are 4 charts for each category. So this is fast food, and this is looking at share of wallet. And just to explain what we mean by share of wallet, it is for the people that buy the brand reading the rows, so taking the top row, Burger King, it's the people who buy Burger King, what percentage of their expenditure in this market is made in each of those brands. So Burger King customers who shop in Burger King only account for 13.5% of Burger King revenues. And so on to the right, you can see where they spend their money elsewhere. And that's the kind of simple way of looking at this particular chart. But it's interesting that Burger King customers spend more of their money in McDonald's than they do in Burger King. Now, why might that be? And what might I do if I was Burger King to deal with that fact? Domino's take 4%, KFC 4%, and Five Guys, poor old Five Guys, less than 1%, and we'll come back to that. For KFC customers, you can see a different set of numbers. They take 12% of the consumer's expenditure on fast food, and you can see that BK takes just under 8%, Domino's 4%, and McDonald's 18%. So now we're looking at this is penetration and cross-brand usage. The first one was share of expenditure. Now this is share of customers, effectively. The first thing to say about the sector is that this is a sector that has 25% of consumers loyal to a single brand, which is middling, I would say. It's not the highest, but it's not the lowest. But 25% of customers only ever shop with one brand of fast food outlet. The chains with the highest of those 100% loyal customers are McDonald's, Burger King, Telepizza, and Too Good To Go. And the one that is used most, unsurprisingly, I think, when you think about its market presence, by people who also buy other fast food is McDonald's. So almost 78% of customers go to McDonald's one way or another at one stage during the course of this period. And the one used least are Five Guys and Papa John's. So again, back to I don't mean to pick on Burger King, but it's the first line. So Burger King has 6% of its customers only go to Burger King. Put another way, almost 95% of Burger King customers go elsewhere at some stage. And remember, this is a subject of loyalty we're talking about. And actually, 77% of Burger King customers go to McDonald's. However, if you look at the line for McDonald's, only 50% of McDonald's customers go to Burger King. Again, if I was running Burger King, I might want to think about what I might do with that sort of information. Looking at average transaction value, and I think the sector is about 15 to 20 euros as an ATV. There are some outliers at the top, at Goico Grill, and at the bottom, Too Good To Go. And what's interesting is, irrespective of which chain they're using, Telepizza and Just Eat customers always spend more money. So there's an interesting consumer segmentation if you were looking to grab revenues and market share. And also, without exception, probably don't bother targeting these consumers as a group, because even if you win them over, they have a relatively low spend whenever they use, and it's not saved by a change in frequency of visit. So back to Burger King, 15 euros typically average ATV, which is okay, more than McDonald's, which is good, but actually, interestingly, less than my customers of Burger King spend everywhere else they go. So and just through that, I haven't got it purely into for Burger King. I'll come back to. This is the frequency of visit. 1.7 times a month is not an infrequent sector, so it's not as high as some, but it's higher than others. Glovo and Uber Eats, the delivery services tend to have higher numbers, and poor old Five Guys. Customers who go to Five Guys tend to go everywhere else significantly more often than they go to Five Guys. For Burger King, the consumers that only go to Burger King go there around about once a quarter. McDonald's is about once every 2 months. And now let's move to supermarkets. Same thing I shall skip this slide. So this is share of wallet. Unsurprisingly, because you know this already, Mercadona, number one, 32% of the market, not 28, despite what the manipulated numbers would tell you. Close to a third of the market in Mercadona. And you can see that Mercadona takes 30% of the spend of Carrefour customers in this sector. Whereas Carrefour takes 11%, but it only takes 5% of the expenditure from people who visit Mercadona. So you begin to see the interrelationship between different brands and the relative prominence of particularly Mercadona in this market. With regard to Mercadona, if there were 3 brands that had been most successful in stealing share from its leadership position, they are firstly Lidl, and then to a lesser extent Carrefour and Dia. If I look at penetration in the sector, only 12% of customers go to a single chain, i.e. everyone, 88% go to multiple chains in supermarket sector. The ones with the highest customers are Mercadona and Eroski, and with the lowest are Aldi, Supercore, and Alcampo. Right. And unsurprisingly, given its market penetration, Mercadona tends to be the chain most likely to be frequented by consumers of every other brand in the market. Looking at average transaction value now in the supermarkets, well, generally the ATV is 20 to 30 euros. The high-end range are Carrefour, Alcampo, Mercadona, and then you've got the more top-up stores with the lower ATVs, typically Condis and Dia, and there are a couple of outliers because they aren't the same business model, which are the cash and carry chains. In terms of frequency of visit, it's relatively high, probably one of the highest sectors that you see in Spain. The variation in frequency of visit is quite significant, though. When you look at Mercadona, Eroski, Consum, Condis, and Aramas, you see a very different ATV to some of the other fascias. And obviously, Mercadona is the shop most frequently shopped at by customers of other stores. Now, finally, fashion. Here is a segment with massive tails. So you see something in the region of about 30% of share of wallet is taken up by independents. So a very different market structure to those that you've seen previously, and that's part of the reason why we put it up. Zara, you can't talk about fashion without talking Zara, is the dominant brand, and you see it taking a quarter of the share of its customers. So that's a pretty loyal base from Zara. But you have to say it's not immune to the rise of Primark and Shein. You see 7% of the expenditure of Zara customers is now in Primark and almost the same in Shein. Shein is taking 20% of the sector share of people who shop at Shein. So it's got, as you saw earlier, a much higher loyalty than most of the other retail brands. And that's a significant change in this market over the last few years. When you look at loyalty and cross-brand usage, only 19% of customers loyal to a single chain, and that's kind of natural because that's not how we buy clothes. Those with the biggest loyal base are Shein and Primark. And what's interesting is 57% of Shein also shop at Primark, and the reciprocal figure is 41%. So again, when you're thinking about how you use this data and think about who your competitors are, think a bit about the extent to which they have strong loyalty and the extent to which they can use that they may be a ripe opportunity for share grab or for defensive strategies. Primark shopped by over half of Zara customers. And finally, on fashion ATV, well, it's a high-ticket item sector, as you would imagine. And Massimo Dutti and Corte Fiel are the ones with the highest sectors. But another way of looking at this data is actually to think about them as customer groups. Because actually, if you wanted to find a target audience that were most likely to spend most money, the answer is scalpers customers when they're shopping in Massimo Dutti. And the lowest are Kiabi customers when they shop at Vinted. Vinted is a slightly strange mix in this thing. Frequency of visit, basically Vinted and Zara are slightly higher than the rest, but it's really not a very high frequency visit sector. Last sector, and I'm not going to do the same thing, I'm just going to show you briefly some numbers. This is extremely brand loyal as a sector, and it's a function of its traditional way of working. But 45% of consumers will shop with a single insurer. Within that, Segura, BBVA, Mocho Madrelina are the top end, and Mapfre is the insurer that's most likely to be purchased alongside another brand. And it has particular overlap with Assisa and with Casa. But as I said before, you really need to look at the subsectors to really understand what these insurance numbers mean. So to sum up then, some conclusions. The first is that for many sectors, the concept of loyalty is really not about loyalty. It's about repertoire leadership. It's about knowing that the consumer has a repertoire of acceptable brands and understanding your position within it. So really, we should redefine what we mean by loyalty to be preeminence within that group. That is, a loyal consumer is one that puts your brand at the forefront of a group of brands that they will continue to buy from. Second conclusion is that you really can't understand your position in that consumer repertoire from your own data. I mean, how could you? It doesn't make sense. So there are things that you need to do. You need to understand how often your consumers are going to your rivals, how much they spend when they go there, and also importantly, how is this changing every month? Because you will be doing things to minimize this leaching of your revenues, revenues that could potentially be yours. And you should be following strategies that are informed by these insights to say, I know where to go, I know where I'm losing the most money and to whom. And so when you've done that, you can start applying the same frequency and ATV KPIs that you've always used in your own business, but you can actually start using them on your competitors as well. And that leads you to be able to produce growth strategies or defensive strategies that are more targeted and more likely to yield better results than trying to do this in an uninformed or blanket way. And finally, whilst physical distribution we see is extremely important when it comes to loyalty, there is growing evidence that it's the level of consumer engagement that is driving the loyalty of consumers. And we are convinced when we look at it that the people who have the richest data sources and who apply artificial intelligence going forwards in the most intelligent way will be the ones that will be successful. And this will be the key battleground in the future